So most people think that working with a financial advisor is only for the wealthy, or it means giving up control of your money. And neither is true. So today we're breaking down the biggest misconceptions with working with a financial advisor, what's real, what's outdated, and what actually matters when it comes to your financial future. Hey everyone, Tommy Durfler, Sam Rice here on the Lighthouse Wealth Group Spotlight Podcast. So, all right, today we're unpacking the biggest misconceptions that people have with working with a financial advisor. And what's interesting is that most of these misunderstandings don't come from bad information, they come from incomplete information. Whether it's little phrases we hear growing up, advice from well-meaning friends, headlines that oversimplify complex ideas.
Those small misunderstandings can quietly shape decades of decisions. When people save, how they invest, and how confident they feel, and even how much stress they carry around, and money.
So, misconception number one is, we hear this a lot, wealth management is only for the wealthy. This is probably the most common one we hear, and it usually comes with a little bit of hesitation. People say things like, oh, I'm not there yet, or I don't really have enough to need that. But the truth is, wealth management isn't about how much money you have, it's really about how intentional you are with what you do have. And some of the people who benefit the most from planning are the ones still building their careers and families. That's when decisions have the most leverage. And so we see it all the time. People wait until life gets complicated before they ask for help. But by then, the choices are narrower and the stress is higher. And wealth management isn't a reward for being wealthy, it's simply a framework for getting you there.
Very good point. The second biggest misconception we see is wealth management is just investing. This one's incredibly common, because investing is the most visible part of the process that people see. People think wealth management equals picking stocks, watching markets, and tracking performance. But investing is really one piece of the puzzle. So those things are true, but it's, there's a larger part that we all take into account. True wealth management looks at your entire financial life. Income, expenses, taxes, risk, goals, and how all of those intertwine into the timing, and make sure all of those pieces work together. We've seen people with great portfolios still feel very stressed because their cash flow is off, their tax situation isn't optimized, and they're not feeling confident about their whole situation. So on the flip side, we've seen people with modest incomes feel very confident and in control because everything is aligned. They've checked off the box for each one of these separate categories of their financial life, rather than just the stock part of it, just the performance or investing part of it. They've addressed all of the issues altogether. So investments matter, but true alignment of all of those focuses matters more.
That's so true, and I like what you said there too, is the alignment of all those things, right? So it's easy just to cherry pick one or two of those things, say, hey, I've done this or that, but really are you looking at all the pieces, and are all the pieces complementing each other? And so, that being said, I think another misconception is, financial advisor just picks stocks. And this one always makes me smile a little bit, because if our job were just picking stocks, we'd been replaced by algorithms a long time ago, and so the real value of an advisor is showing up during moments of uncertainty, and really being the calm in the middle of the storm when there's market downturns, there's job changes, there's inheritance, sudden wealth, or big life transitions. That's when the emotional side really kicks in and logic gets fuzzy. And so, I always tell people, hey, we all think logically, but we do act emotionally. And so I think a good advisor really helps slow things down, bring clarity and maybe a bigger picture to things, and help people avoid decisions they'll regret later. And I mean, Sam, how many times have we been in meetings before, and you know, we'll hear somebody and we're just thinking, man, we're going down the wrong. You got to be careful on this one. We're going down a slippery slope here. And so we kind of have to bring people back a little bit, rein them in as far as saying, yes, we can do that, but here's another approach to this. You know what I mean?
Always having a plan to refer back to.
Yeah, and so most of the value comes from just helping people stay grounded and focused when the headlines are loud, right? When the emotions are loud, when everything's kind of coming at you, and you know, you don't know how to really, you know, figure these things out and bring clarity into a very complex situation. And that's where I think advisors are one that, hey, let me bring back the bigger picture here. Or, hey, remember the plan that we have set up. We knew this could be, you know, potential issue in the plan, but because of that, we're able to come back and say, hey, let's just focus on what we have done, and, you know, whatever that may be, and being that calm in the storm really is value.
Yeah, I mean, of course, we can always make changes, but let's refer back to something and see how it affects our bigger picture, what we've already planned on. That's the safe harbor at the end of the day. Okay, so another misconception. I'll just figure it out later. So procrastination. This one sounds harmless, even if responsible, but you know, it's one of the most expensive beliefs we see. People say, I'll deal with this thing when things settle down. I'll focus on it when I make more money. You know, push it off down the line. But when life rarely slows down on its own, right? In most cases, from what we've seen, you know, as life goes on, it kind of gets more complicated.
Yeah, definitely.
Yeah. So, you know, time is one of the best resources you can't replace. So when you delay planning, you're giving up flexibility. You know, it usually leads to fewer decisions and options down the road. And starting early doesn't mean having everything figured out, right? Like, because we're always making revisions, but having a good sounding board is so helpful. It just means we're giving yourself more choices down the road, right? If we're planning earlier. So taking that step first and being open to just starting some level of planning, some level of investing is so key to, you know, I'll figure it out a couple years down the road when I make more money, what have you, you know, because you can never get that time back.
Yeah. And being a sounding board is a big part of that. You know, like you just mentioned, being a sounding board is having someone you can call up and say, hey, let me pick your brain real quick. Hey, how do you feel about this? Or how do you feel about that? And,
oh, yeah.
You know, I do that with health professionals all the time, whether it be a personal trainer, and it's like you always hear these new fads in the health industry, and you're kind of like, I need someone to kind of help me and say, no, don't believe in that. That's just a fad, and that'll come and go. You know, and I think the earlier you start with someone in the financial planning world, the better it is, because you get to build that relationship, right? Because as advisors, we want to know, hey, what keeps you up at night? You know, what are the things you're thinking about? We want to know these things, and what are the things that you're not concerned about that we don't need to address as often. And I think by starting early, you get to build that relationship with somebody. So the goal would be in 5-10 years, you're saying, hey, my advisor knows everything about me, man. They know exactly what my fears are and what I'm trying to accomplish. And they know before I even walk in for a meeting, you know, what I may bring up. And so I think that really, you don't need to wait till the last minute or you think you're ready to start building that relationship.
Yeah. Well, again, there's so much information out there. Being a sounding board and a filter for clients is huge.
It is. And, you know, another thing we hear and we get sometimes is, you know, wealth management is about maximizing returns. And this one trips up a lot of people because, yes, returns absolutely matter, but they're not the whole story. And keep in mind, advisors do not have control of the markets. No one does. So we can't predict and tell you, hey, yeah, we're going to get 8% this year if you're in the market. It just doesn't work that way. And so, maximizing returns, yes, of course, we want to make sure you're getting the most bang for your buck. And a part of, our investment process are looking for good managers that can do that consistently over time. But a lot of people will say, well, hey, I really want to earn 12% this year, but I want to learn 11. Hey, what did you guys do? And it's like, that's not why you hire us. We don't have control of that. We've looked at other planning strategies in the meantime, but they just don't tell you the whole story. And so chasing the highest return often means taking on more risk than people realize, especially when emotions get involved. And so, a strong plan isn't built to look good in a spreadsheet. It's built to hold up in real life. And so the goal isn't perfection, it's sustainability. And that's what, if you're just looking to maximize returns, yeah, we do that like everybody else does, but that doesn't mean you're necessarily going to get ahead or it's going to work out that way. And so again, we want to be able to maximize returns given a certain level of risk. And we can't be judged on something that we just don't have control of.
That's right. And then last and maybe most importantly, it's all about the money. This misconception, again, might be one of the most important ones of all. At the end of the day, money isn't the goal, it's a tool to achieve the goals down the road. People don't want to make money for its own sake. They want freedom. They want flexibility. They want peace of mind. And they want to feel confident about their own future and to secure their choices down the road. Wealth management is really about aligning the money with what matters most in your life. Those goals that we talk about in planning meetings, what have you. So it's really just a tool to achieve those goals and those dreams and that freedom down the road.
And I think, if you look at that, I've even heard some people say like, well, you just put numbers in the software and the software basically spits out a plan for you. And yeah, to some degree it does, and just like I would compare it to a doctor, I go and get my blood work done and then I can see the results of my own. I don't know how to interpret those results. I don't know, hey, okay, I got this information, got this data. How do I interpret this? What does this mean in real life? You know what I mean? That's why a doctor goes to school to say, hey, I know how to measure these things. I know how to figure these things out. I know how to interpret these things so I can take this hard data and interpret that into the lifestyle that you want. Okay, great. That's what I rely on a doctor for, or a healthcare professional, Anybody can have access and get that data. It's not the data, it's the interpretation of the data to say, okay, tell me what this means in real life, and some of those things are, hey, we put together a plan for you and you do not have a high probability, of sustaining your lifestyle, so what does that mean? Well,
what do we do?
A couple of different, exactly. What do we do? So let's have that conversation and see what matters to you most, and where people a lot of times will just see, the data and say, well, I can get that data and that's not a big deal. It's like, well, yeah, but interpreting that and knowing what's important and having somebody walk alongside with you during, the most important phase of your life is there's value there, because I think without it, it would be paralysis by analysis, where a lot of people that just say, hey, well, I can look at all this data, I can do it myself. And that's kind of like telling a doctor, well, just give me my lab results and I'll figure out how to do it myself. And they're like,
I'll diagnose myself.
Yeah, exactly. It's like, well, good luck on that, because you have biases that you're carrying with you.
Yeah.
A lot of times you don't know, and you need somebody outside of your own thought process to say, no, that's not the way to interpret this, whatever it may be. And so,
Yeah.
and I think a good example of that too is, when a lot of times in our meetings, we'll have, people that say, hey, based on the lifestyle that you want, there's not a high probability that you can sustain this lifestyle in the best years of your life. And they're like, well, I'll just work another 10 years. And you're like, well, that might happen. Let's talk about that for a second,
See how it affects everything.
What about your health? What if you're forced that you cannot work, that to no fault of your own? What does that look like? Or, I've seen this and people say, man, I'm just going to work and I'm just going to die at my desk. And you're like, well, that's great. But I've seen a lot of people say that. And I have a lot of people come in and say, you know what? I'm tired. I'm done. And they're, they're ready to throw in the white towel because all of a sudden, hey, you know what? At a time I did think that, but now things have changed. Maybe it's priorities or life circumstances or whatever it may be. And then they don't have that anymore. And now it's like, okay, great. So we want to be able to prepare and help people and give advice based on, hey, this is what we've seen other families do or other people. Here's some things to keep in mind and, start planting seeds for the what ifs in life that always happen.
Yeah. I mean, to add a little bit to that, right? Because just think about this too, as just a pure timeline. If we were to have clients, starting off with us in their 40s, we could very well have these clients with us and helping them guide them through their financial life for 40 or 50 years. So, you set up an initial plan, but over that course of life, you're going to be throwing the ringer at it, and having somebody there to help diagnose those changes or those ideas and its effect on the plan throughout the multiple decades of life, that's huge.
Yeah. And so, I just think of our earlier podcast that we did, When and How to Choose an Advisor. I think that's completely up to the individual. And there are times where you may say, hey, listen, I'm, just starting out. I need to focus on, student loans. I need to get out of debt. Great. Focus on that. Be hyper-focused on getting out of debt. You might not need an advisor right away. But I think as life starts to get a little bit more complicated, having somebody in your corner during those times where it is getting complicated is really valuable. And a lot of people think, well, I've got to have a certain amount of money to be able to have before an advisor can really help me. Well, no, we're here to help you make those decisions as you're building wealth so that when you do have it, it's much easier to manage because you've had 20 years of working with somebody, of being able to help you manage that and making good decisions along the way. So, but I mean, there's plethora of other misconceptions out there, and I think today we wanted to really make sure and just get that out there and help people understand a lot of the misconceptions that you can start working with somebody right away, and they're there to kind of walk you through all these different life decisions and see how that affects you, and really create clarity when the headlines and the news and the media are all throwing so much at you. So let's do this, Sam. Let's do a little rapid fire with the myth that we hear a lot of times versus reality. So one myth we hear is, I need to have everything figured out before talking to an advisor.
And the reality is, that's actually exactly why people seek guidance. So you don't.
Exactly. Wealth management is only for retirees.
And you know what? Reality, it's relevant in every stage of life.
Absolutely. Another myth is, more money automatically means less stress.
Yeah, again, without a plan, in reality, more money often creates more complexity.
I agree with that wholeheartedly. So, obviously as we wrap this up, if there's one thing we hope you take away from today, it's this: wealth management isn't about perfection. It's about being intentional, asking better questions, and making informed decisions over time. So if this conversation sparks something for you, that's a win.
All right. Thanks, everyone, for spending time with us today, and we'll see you on the next time.
Take care.